Ever wondered how the world's wealthiest individuals and corporations seem to weather economic storms while maintaining their fortunes? The secret often lies in tax havens, low-tax jurisdictions offering anonymity and financial security. These elusive financial sanctuaries have been quietly shaping global economies for over a century. But tax havens aren't just about the rich staying rich. They influence policies, markets, and even the taxes you pay. Today, we're uncovering the secret history of tax havens, exploring how they evolved, who uses them, their impact on global wealth distribution, and why their story matters to you. The history of tax havens begins in the early 20th century. With the rise of income taxes across Europe and the United States to fund wars and public projects, wealthy individuals began searching for ways to shield their fortunes. Switzerland, with its strict banking secrecy laws, became the first haven for hidden wealth. Its neutrality and discretion during both world wars made it especially appealing to foreign investors seeking a safe, tax-free home for their assets. By the 1920s, other nations joined the game. Bermuda and the Cayman Islands capitalized on their colonial ties to Britain, offering zero taxes on income and profits while providing legal confidentiality. These jurisdictions became the go-to spots for companies and individuals seeking financial refuge. In the post-war era, tax havens gained traction as global financial systems grew more interconnected. Offshore banking and incorporation services became industries in their own right, allowing tax havens to evolve from niche solutions for the elite into essential components of global finance. Tax havens rely on two main pillars: low or no taxes and strict confidentiality. Their appeal lies in offering a financial sanctuary that minimizes tax liabilities while keeping financial dealings under wraps. Corporations. Multinational companies utilize tax havens to reduce their tax burdens through strategies like profit shifting. For instance, they transfer intellectual property to subsidiaries in low-tax jurisdictions and charge high licensing fees to operations in high-tax countries. This artificially shifts profits to the haven, slashing their overall tax bills. Individuals. For wealthy individuals, tax havens offer offshore accounts, trusts, and shell companies that obscure ownership and reduce exposure to taxes. These tools also protect assets from lawsuits or government seizures. A notable example is the double Irish with a Dutch sandwich, a now outlawed tax strategy used by companies like Google. It allowed profits to flow through Ireland and the Netherlands before landing in a tax haven, drastically reducing corporate tax rates. Tax havens aren't exclusive to billionaires and conglomerates. Their clientele includes politicians, celebrities, and even middle-income individuals who want to shield inheritances or investments. The Panama Papers leak in 2016 and the Paradise Papers in 2017 exposed the sheer scale of offshore wealth. They revealed a network of tax havens used by everyone from royalty to global corporations. For example, Apple saved billions of dollars by routing profits through Ireland, leveraging the country's low corporate tax rate. Politicians and public figures have also been implicated, using tax havens to hide assets and avoid scrutiny. Even smaller-scale investors use tax havens to gain access to global markets while minimizing regulatory burdens. This broad usage highlights how deeply tax havens are embedded in the financial ecosystem. The influence of tax havens extends far beyond the wealthy. It's estimated that $10 trillion in wealth is hidden offshore, depriving governments worldwide of up to $600 billion in annual tax revenue. This loss has profound consequences. For governments, reduced tax revenue means fewer funds for public services like healthcare, education, and infrastructure. This forces governments to either cut spending or increase taxes on middle and lower income citizens. For the economy, tax havens exacerbate inequality. By enabling the wealthy to avoid their fair share, they widen the gap between the rich and everyone else. For global competition, proponents argue that tax havens foster economic efficiency by allowing businesses to reinvest savings into innovation and growth. However, critics point out that this often comes at the expense of local economies. Consider the case of developing nations. Many lose billions in potential tax revenue as corporations exploit local resources while funneling profits offshore. This race to the bottom in tax rates has sparked debates over global economic fairness. Tax havens have drawn increasing scrutiny in recent decades. Governments and organizations have introduced measures to curb their use with mixed success. Legislative actions, laws like the US's Foreign Account Tax Compliance Act and the European Union's Anti-Tax Avoidance Directive, aim to increase transparency and hold corporations accountable. International initiatives, the OECD's Base Erosion and Profit Shifting (BEPS) framework, seeks to close loopholes that allow tax avoidance on a massive scale. BEPS initiatives encourage countries to adopt stricter tax regulations and improve data sharing to prevent profit shifting. Naming and shaming. Public scandals such as the Panama Papers have brought tax havens into the spotlight, pressuring governments and corporations to prioritize ethical tax practices. These exposés have also empowered citizens to demand more transparency and accountability from their leaders. Despite these efforts, tax havens continue to thrive. Wealthy individuals and corporations often adapt to new regulations, finding innovative ways to bypass restrictions. This perpetual game of cat and mouse demonstrates the difficulty of eliminating tax havens entirely. In the digital age, technology has both exposed and facilitated the use of tax havens. Advanced encryption tools and blockchain technology make it easier for individuals to hide assets, while digital currencies like Bitcoin offer a new level of anonymity. At the same time, technology has empowered whistleblowers and investigative journalists. Platforms like WikiLeaks and collaborations between media outlets have made it possible to analyze and share vast datasets, such as the Paradise Papers, revealing the inner workings of offshore finance. As technology evolves, the balance of power in the fight over tax havens could shift further. Will regulators harness technology to clamp down on abuses, or will innovation only deepen the secrecy of offshore systems? Even if you never use a tax haven, their existence affects your life. The revenue lost to offshore tax avoidance often translates into higher taxes or reduced public services for ordinary citizens. Infrastructure projects might be delayed, healthcare systems underfunded, and education budgets slashed, all to compensate for the shortfall created by untaxed wealth. Additionally, tax havens shape global financial policies. Nations often adjust their tax rates to compete with offshore jurisdictions, which can lead to unpredictable economic shifts. Understanding how these systems work helps you stay informed and navigate the economic landscape more effectively. The resilience of tax havens lies in their appeal to both individuals and governments. While they enable tax avoidance, they also serve as financial lifelines for smaller nations. Many tax havens are economically dependent on the industries surrounding offshore banking, which contribute significantly to their GDP. Efforts to eradicate tax havens must therefore balance ethical concerns with economic realities. Cutting off these financial hubs without offering alternatives risks destabilizing small economies, creating unintended consequences for global markets. The history of tax havens is a story of wealth, power, and adaptation. What began as a means for the elite to protect their fortunes has evolved into a cornerstone of modern finance, with far-reaching implications for economies and societies worldwide. As debates over fairness and regulation continue, one thing is clear: tax havens aren't going away anytime soon. Whether you view them as necessary tools for financial freedom or as mechanisms of inequality, their influence is undeniable. So the next time you hear about a corporation's offshore dealings or a billionaire's secret accounts, remember, tax havens aren't just a footnote in financial history. They're an active, evolving force that shapes the world we live in. If you enjoyed this exploration of tax havens and their impact, don't forget to like this video and subscribe to our channel, Echoes of Wealth and Power. Share your thoughts in the comments. Are tax havens an unavoidable part of our economic system, or is it time for a global overhaul? Let's discuss.